Before I do anything, I just want to say first and foremost that our hearts and prayers go out to everybody who's been impacted by this coronavirus, and the fact that we've all been impacted, but first and foremost to those who have been medically impacted and other hardships. This has been the likes of which that so many people have never seen in their lifetime, and it is like the perfect storm of medical, financial, emotional, psychological, even spiritual hindrance to our daily lives. And we pray that as quickly as it came, it quickly leaves, and that we are in a position to rebuild our lives and restructure and hopefully, if nothing else, grow as a result of all this. And for that, we pray, and we hope that it'll come very soon. And with that said, I just wanted to thank you for the opportunity to share my thoughts with your audience. It is it's a very unprecedented time in most people's lives, and in the business world, I think business professionals and industry leaders are being impacted in many different ways. I can tell you that within the real estate and mortgage world that I'm in, and that I've been in for the last 20 plus years, I've seen so many things that have changed in the last few weeks. And what's even more interesting is the fact that within the same industry, I'm seeing different people handle things different ways. And I think that part of what might happen as a result of this is definitely new leadership may be born in the real estate and financial services world. New people will seize the moment and take advantage of the uncertainty. There's a lot of uncertainty and there's a lot of opportunity. I mean, I think everybody within hardship and times of pain and suffering, a lot of people are being forced to, and this has happened throughout the ages, throughout history. People have been forced to retrench and retreat and react and adjust to things. And in the mortgage and real estate world, one of the hashtags are going around pivoting and adjusting and the new norm. And I think all of these are important. We've been doing a lot of these, and I appreciate, again, the opportunity to share with your audience. We've been doing the same thing. We've been trying to, on our end in mortgage banking world, be on the forefront of information and communication to our clients, to our audience, to expand our reach to whoever is interested in knowing about the mortgage world in particular. So many things have happened in the last couple of weeks. I'm going to give little breakdowns as to where I see major changes as it relates to a individual and a professional that people should know. First of all, interest rates dropped. And at some point in time, when the news of the coronavirus first started to trickle its way into the United States, rates dropped to historical proportions, interest rates. And for a brief moment, rates went under 3%. And we were writing paper at under 3%. And within hours, that funnel dried up. And then the 10-year, which a lot of people are looking at, the 10-year US Treasury, which is a very important barometer as to how you gauge interest rates, mortgage rates, and federal rates, and just, I would say, the well-being of the US economy, that started to drop afterwards. I mean, when Corona first started, we were in I'd say under 2% on the 10-year US Treasury. Today, for example, we're at 60 basis points. So when you drop below 2%, it's already a huge psychological level. When you're in the ones, it just shows what happens is just the fundamentals. And I want people to understand, so many people don't. The fundamentals of it is the fact that when money is being pulled out of the stock market, when the stock market is losing money, so you're going from bear market to bull market, and when you have that loss in stocks and equities, money is being pulled out and they go into a safe haven of bonds, which is the US Treasuries and other shorter term and longer term securities. And that's what happened. As the stock market was losing money, money went into the bond market, and rates started to dip even lower. And then at some point in time, again, as I said, the few hour click of just dropping below 3%, which has never happened in ever, it quickly shot up. And part of the reason it shot up is because the same way that individuals and people on the street are going to grocery stores and they're finding a lack of supplies, certain things. I mean, for some reason in this crisis, toilet paper seems to be the the national flag of this crisis. So people are finding a just a lack of these things. And then you have either some people are hoarding it, some people are buying it, trying to get an excess of it. And as a result, you're not getting the things that you need. And the same exact thing happened in the banking world, which is there was a run on the banks, not necessarily a run on the banks for people to withdraw their money, which it did. A lot of people pulled out cash, the likes of which we haven't seen in many, many years, decades, and even more than that. And but besides for that, people said, hey, it's cheap money. Let's jump on the bandwagon. And not only that, businesses started to try to get loans and funding, and individuals and consumers who wanted to refinance because they've heard of all these things. And then just as quickly, banks said, hold 1 second, we don't know what's going on over here. And they pulled the plug and they basically made rates shoot up. And all of a sudden, with the surge of capacity, they didn't even have the manpower to handle all of this. So they also increased rates. So that was in early March. And then you just had extreme volatility. And that's when the Fed came in and they lowered their rates. They came in on a Sunday, which is unprecedented for them. Never happened before. And that was 2 days before a scheduled meeting. So the fact that they had to come in on a Sunday on a weekend, 48 hours before they were supposed to just make this announcement, which everyone expected, they basically took out a bazooka gun and said, all right, we're dropping the Fed funds rate to 0. And we're going to be buying mortgage-backed securities, and we're going to be helping the banks, giving them leverage and liquidity, and trying to make sure that they're well capitalized. A lot of people didn't see all the underlying messages with that. What they did hear was rates are 0%. We started to get flooded with calls. We're a residential mortgage bank. So all of the banks started to get flooded with calls, and they were very disappointed, the customers, when they found out that rates aren't as low as they thought. And so what does a 0% Fed funds rate mean? 0% Fed funds rate means that the rate that the banks lend one another is 0%. That's not what the consumer gets. What the consumer gets on a mortgage rate is what the bank is willing to put out their mortgage for. Like you buy a can of beans in the grocery store, there's a price and then there's a margin, and every grocery store is different. They all try to compete with one another. You look at gas stations, everybody's very volatile, especially this time with the crude oil pricing that's going up and down, also with the global uncertainty. That's a great barometer to say, hold on 1 second, let me see what's going on in the marketplace. So you look at all these gas stations and they're all at $2.10, and then the one down the block is $2.11, and the one 3 miles away is $2.06. So that just tells you that there is this diversity, but at the same time, things are going down, and everybody needs to compete with one another, but they also have to do what's good for them. Either from a practicality perspective, they say, look, we want to siphon and we want to filter in terms of how much business we're doing, how much gas we're producing, or whatever it may be. Think of it in any business. And then they raise their prices accordingly. If you're too high, you're out of the market. If you're too low, you're getting too much business. And in the banking world, that's exactly what was happening. Banks were just making their rates higher so that they would not get the clients, because they were just increased in demand. And then as the coronavirus started to trickle its way deeper into the US, and states started to get shut down and on lockdown, the Fed had to come in again and basically say they will just come in with an unlimited capacity to help banks. And they came in with a bunch of different variations in terms of stimulus. So they went and they gave the consumers a stimulus, which is basically anybody who was making under a certain amount of money will be receiving checks, and based on family members. And for those who don't know about this, you can contact me. I can give you a quick link to a calculator in terms of figuring out if you're eligible and how much money you'll be getting. And then the stimulus was for banks and businesses to be able to continue to do their business, and part of which continues to trickle out now, which is loans and grants for businesses who are suffering and struggling, and also for businesses who want to maintain themselves but need to tap into the federal SBA lending to try to get some kind of capital to get them through these challenging times. Everybody has been impacted. So you have, no matter who or what you are, you're basically working and living a different life. And based on that, you have to figure out what the new norm is and how you've been impacted. What's been happening now in the banking world, and here's where there's opportunity and challenge. What's been happening in the banking world is, as things are starting to unravel, or the new norm, or the realities are starting to set in, or people are starting to dissect which pockets of areas are going to be vulnerable or opportunistic. The biggest concern right now in the banking world, and this is where I'm going to come into it from a opportunity and from a challenge, is just the unemployment rate. We keep hearing, and so far we're 2 weeks into the unemployment numbers and statistics as they're coming out from the new reality of the coronavirus. Last week, the unemployment numbers came out where over 3 million, about 3.5 million, 3.3 million people filed for unemployment, which is tragic, and it is heartbreaking. And what we should be doing, first and foremost, from a just humanitarian and moral perspective, is we should be doing whatever we could be doing as an individual. Everybody's life has been altered, but as we see, a lot of people have time, and a lot of people are able to now, from the convenience of their own home, even though they can't necessarily shop or buy or go to a restaurant or go to a small business. Each person on their own could do whatever and should do whatever they can to support local business, the stores and the restaurants and the merchants who are out of business, who are basically closed, or for the most part quasi-closed, because they can't have people come into their store or the restaurant or their business. So what they're trying to do is and hopefully they have good guidance and good ownership and good friends who are helping them to adjust to the new reality and to react to things. And what we could be doing on our end is supporting them through social media, reposting any of their sales, any of their discounts, any of their opportunities, talk about them, comment on their things, give them feedback. And if nothing else, I would say reach out to these people if you know them, if you're friends with them on a personal level, just to touch base and say, how are you doing? What can I do for you? Is there something? You would be surprised at, first of all, the tremendous benefit that you may be doing to somebody else. And at the same time, it may inspire you to think of ways to either help them or ultimately to help yourself. And I think that's what these crises do. They bring out the best in so many people. We see so many people that schools are 3D printing masks, children and people who are otherwise doing different industries that are either now laid off or home or furloughed or whatever it is. They are thinking of ways to support the hospitals and the medical. And again, hats off to the teachers and the medical professionals who are working selflessly and tirelessly to help anyone and everyone out there. And what we need to be doing is thinking of others before we even think about ourselves. And what we're doing, and again, part of why we do these webinars and part of why we're doing these outreach programs is to just try to communicate and resonate, if nothing else, one line, one message with somebody as to what can I do to have an impact, to make life different or better for someone else, and to take tidbits of information that you can glean from somebody who's an expert in their industry, an expert in their field. And if you listen to a half an hour webinar or an hour webinar, if you can have one takeaway, you should take notes throughout, and you should really pay attention. If you're already going to set the time and focus and the effort, I would say, be present in anything that you're doing. And it's one of the most critical things that I think of. One of the lessons that I try to portray to anybody and relate to anybody is, when you're doing something, be present. There's a lot of talk about multitasking, but in this environment with so many distractions, you're not going to be as productive, you're not going to be as efficient, you're not going to be as effective, and you're not going to be able to really jump out and do what you need to do if you're not 100% in the thing that you're doing. So if you're listening to something, spend the time just to absorb it and find people and find content and find leaders and find experts who you can relate to, people who are quote unquote like-minded with you, and then try to glean whatever you can from them. And if you have one takeaway, write that down and then walk away from the meeting saying, or from the session or the webinar saying, what can I do to have an impact? And on an individual level, because so many people, what I'm seeing is we're getting calls, everybody thinks and everybody hears rates are low, and now once they are informed about the fact that rates are not 0%, then they start to say, okay, well, does it pay for me to refinance? And then we go through that conversation, and they For many of them, it's just an opportunity to be able to save a few dollars on their mortgage payment, which is great. But beyond that, we try to do whatever guidance and consultation we can to not just talk to them about the low rates, but we want to talk about the long-term and short-term financial impacts that are presently out there in the marketplace, the risks, the rewards, and the concerns. So because of the increase in volatility, people and just the unraveling of so many different industries, the concern here is unemployment. So we had, as I said, last week, 3 million. This week, yesterday was announced 6.6 million people in 1 week were laid off for unemployment. And who knows, time will tell in terms of the percentage. And people are speculating as to a 20 or 30% unemployment, which is horrific in of itself, Great Depressionary levels. Even at the Great Recession, which was in 2008, it was half of that, less than that, depending on the numbers and the metrics that you're looking at. So here they're talking about just monumental numbers, and the aside from the personal just fear of it, the way to look at it from the other perspective is if 75-80% of people are still employed, then life will certainly continue to function. I mean, there are going to be millions and millions of people that are impacted, again, medically and professionally and just employment-wise. But for the other strength, and they say in business, you know, you have your 80-20, where you have 20% of your big producers producing 80% of your business. It's almost the same thing. And I certainly don't want to belittle the fact that people who are unemployed, just the opposite. The people who are unemployed, I actually believe they can, if they can use this opportunity to react, to readjust, to pivot, and to say, okay, I was doing something. I mean, what we're all seeing now is people are able to work from home, whether, you know, by force or by demand or by necessity. People are working from home, they're adjusting, and companies will realize that, you know what, we can get away with a different type of work environment. Individuals will realize that, you know what, we don't need as much money. We were stuck at home for a month, and life adjusted either by force or by design, and we were able to adjust to it. And I need to realign my purpose and my thoughts in terms of you know, what I believe to be, you know, a real need versus a real want. And outside of that, people are saying to themselves, how can I adjust my financial situations? How can I adjust personally? You know, if you're not a business owner, if you're an individual, are there opportunities for me? So there's opportunities in terms of they just came out with, excuse me, part of the federal stimulus plan was a mortgage forbearance, which basically is allowing people to, if you're in a hardship, you don't have to make your mortgage payment for up to 6 months. Now, to me, I've been on my soapbox over here for the last 2-3 days, if not more, trying to talk to people about what this means, because we're getting flooded with calls. There's one little servicer that we do business with that represents, you know, a small, tiny percentage of the mortgages in the United States of America. By April 1st, they already had 8,000 phone calls on mortgage forbearance, on people who want to skip their mortgage. And it's important to know a forbearance is not a forgiveness. If you don't pay your mortgage, then you're not going to, it's not forgiven. It's not just going away. If your mortgage payment is, you know, $4,000 a month with principal and interest and taxes and insurance, you don't make your $4,000 payment in April, you will owe it to the bank. And we'll get to that in a second. So you basically have from April 1, and if nothing else, I just want to communicate the fact to people that your mortgage needs to be current through March. So if for some reason somebody got stuck in March and they weren't able to make their payment for whatever reason, or prior to that they weren't able to make their payment, they wouldn't be eligible for this program. And so assuming that you're eligible, you need to call the bank, you need to attest, you need to affirm. There's no documentation that's needed to be eligible for it. You just need to affirm that you have a hardship, and then you're basically in. And they give you up to 6 months where your mortgage is in forbearance. Now, what I want to just point out to people is, aside from the fact that the forbearance is not a forgiveness, your mortgages, if again, just use easy numbers, if you have $1,000 a month of principal, interest, taxes, and insurance, you don't make those 6 months of payments. Come month number 7, you need to call the bank. So first of all, you need to call the bank to opt in. I spoke with people who are just assuming that they automatically get it. That's not the case. You need to call your bank. You need to wait online on the phone and the grueling waiting periods and make sure that you opt in for it. And the second thing is you need to make sure that in 6 months from now, month number 7, you need to call them back and say, I can or I cannot make my payments in month number 7. Month number 7, if your payment is $1,000 a month, you owe them $7,000. So now think about it from this perspective. If your monthly payment is $5,000 a month, you owe them $30,000. And then month number 7, $35,000. So when you come to them month number 7, it is very likely that the person who is in hardship, if they don't have that money, the bank will say, all right, look, you don't have the money, now let's talk. And then the bank is going to figure out ways to restructure your loan or to put you in a modification or to figure out how that payment will be spread out or recaptured somehow. The banks are not automatically going to put it at the end of the mortgage. The banks are automatically not going to say, well, you're going to pay me $10 for the next 29 years. They're going to try to be as aggressive as possible in terms of getting their money. And at that point in time, in terms of qualifying your hardship and the fact that you are in hardship. So anybody who's not really in hardship, you're doing yourself a disservice. And if nothing else, one of my takeaways here is you will be doing yourself a disservice if you apply for this forbearance if you don't need it. And by definition, speak to a lawyer about it. We had a great session with somebody who's a modification and mortgage relief specialist. And forbearance by definition is somebody who's already in default. And that's a big word. That's not like a, deferment. That's not a, we're going to pause payments. Forbearance is foreclosure, means default. So just keep that in mind. So month number 7, you're going to have this hardship, and then the bank's going to negotiate with you. And if the banks are in a comfortable position, they're not going to be as flexible as they would be, and they will be very rigid in terms of how they expect you to make those payments, or putting you in a position that protects them, doesn't necessarily protect you. There are consumer protection laws and all that, and they're not going to do anything that's going to intentionally harm a consumer or put them into a mortgage, foreclosure problem, but they're just not going to forgive the money. And if anything, they may modify, and these do have credit impacts. By law right now, if you go into forbearance, it can't affect your credit negatively. Does it mean that your credit is going to be reported as positive? That means if I do my credit report, April, May, June, is it going to say current, check? It's unknown. It's possible that it won't. So you're basically going to have a gap on your credit report possibly, and not because you did anything wrong, you're following the rules. And then in 3 months from now or 4 months from now, somebody may look at us and say, well, you were in forbearance. Tell me about that. What was your hardship? We saw it in 2008. One thing I can tell people is, unfortunately, we have front row seats to the mortgage tsunami, to the 2008 housing crash. And we were there. We were an active lender. We were doing a ton of business. And we saw front and center about all the people that truly were swept up in the wave of foreclosures and fraud and issues because they were misguided or misrepresented. So you need to be very mindful of that. And we know now that banks have already said, if you're in this forbearance, if you don't make your mortgage payment, we're not going to refinance you. So keep that in mind also. So you want to be strategic about what you're doing, and you also want to be very careful and prudent. How does it impact me short-term and long-term? And with that said, I want to be very mindful of the fact that everybody is in their own little bubble. I think one of the things that we pride ourselves at Approved Funding is that, we're a mortgage banker just like Chase and Bank of America and all the big names out there, the Quicken Loans. What's different about us is the fact that we want to go one-on-one. We for us, it's a matter of quality versus quantity, and we will do whatever it takes to be that mortgage advisor for people to make sure that the recommendation to you is specific to you. It's not the one-size-fits-all. Mortgages and financial advice and guidance is not a one-size-fits-all thing. So you need to deal with somebody who's, and I would say this in every profession, if you're a business owner, you want to speak with a coach or a mentor or an entrepreneur or a guidance, an advisor, consultant, who's going to sit there and say, look, I don't know about widgets, but I know business and I know sales and I know marketing. And in your case, tell me about yourself. Tell me what your objective is. Tell me what you want to see. Tell me your short term. Tell me your long term strategies. Tell me your needs and your wants and your strengths and your skills. And you may have literally twin brothers who are sitting there, and the guidance should be different for each one of them, even though they're in the same business with the same job with the same income. But because their personalities are different, because their profile is different, because their needs are different, and because their strengths are different, the guidance and the recommendation to them should be different. And that's where we're coming from. We're coming from a vantage point of, we are in finance. People call us and people call upon us when they need money. We're trying to help people now with the SBA stimulus and broker loans to the SBA banks that are doing it. And at the same time, we're trying to give guidance to people who are self-employed, people who want to, let's say somebody there's a ton of equity right now in the marketplace, which is different. And when I talk about opportunities, people are waiting on the sidelines. First of all, the commercial market is really, I don't want to discuss it now. It definitely deserves its own session, but the commercial market may be severely impacted because it was already, struggling prior to this because of all the different changes, regulatory wise. And if payments don't come in, if banks don't get the payments that they need, then that's going to be a game changer for the commercial world, because a lot of people will just sit it out and say, you know what, I can't pay. I'm not getting my payments from my tenants. Think about any retail business owner, landlord. They're not getting anything. And multifamily, maybe apartments, hopefully those people will pay. But right now, nobody's being forced to pay. Nobody's obligated to pay. So really, people are at a standstill. Banks are at a standstill. And in about 45 days from now, we will see, because you'll see about 1 month's worth of payment collectibles. And if those payments don't come in, banks are assuming a 20% forbearance, default, delinquency, whatever you want to call it. They're assuming 20%. If it's more than the 20%, because either people can't, the pain and suffering and hardship is so bad out there, or it's because people just want to game the system or take advantage of the system, however you want to put it. And I'm not judging or questioning anybody. If the default and delinquency and forbearance rate is higher than the banks think, that will have a real big impact in the commercial lending world. In the residential lending world, banks are already trying to, because this is part of what the government is doing, is they're trying to step in and give money to the servicing companies to be able to sustain themselves when payments don't come in. If in FHA, if you have an FHA mortgage, or if you're going to do an FHA mortgage, those guidelines have already changed, because your servicer needs to advance the money to their investor, to their bondholder, regardless of whether or not they receive the payment. So they will literally be bankrupted if even 10% or 20% of the people don't make their payments, and they are forced to advance the money. And then separately, even if they have the money to advance for the percentage, it's going to cause massive margin calls, because their servicing value is being decreased, and it will cause a real hardship and strain to the financial banking system. So really, there's a lot of uncertainty, and I hope we're in a completely different environment in a month from now. But I would say that the real key will be seeing what happens in 30 to 45 days in the residential and the commercial world. I do want to kind of start winding down by saying, I look at almost every crisis, and I would say even any challenges I tell people, and I have not yet been sick of hearing myself say this, which is my guide to navigating through these challenges is using this GPS method. I have a GPS method to help everybody get through these challenging times. And the GPS method is, G is for gratitude. A person they need to start their day with gratitude. You need to sit there and make a list. You construct a list every single day. You have your list, you read it. You read it to yourself, you read it out loud, you start your day with that. I'm thankful for this, and I'm thankful for that. I have this and I have that, and I know this and I know that, and this is good and this is good and this is good. Even people were telling me that some of the symptoms of coronavirus is the lack of taste. You can't walk properly. Those are things that most people take for granted. I can taste something. I've added that to my list. I can taste, and I can walk, and I can talk, and I can breathe. The things that we take for granted, so many people are suffering with right now. So you need to start your day with gratitude. You need to start your day with appreciation. That in of itself will give you strength. Then the P in the GPS method is prayer. You need to set time out to pray. If you're a religious Orthodox Jew, a little bit easier. You may have the regimen to do it. Regardless, people need to take the time to pause, to stop, to think, and to thank God. literally to thank God, to say, look, as easily as you brought this into our lives, you can get it out in the blink of an eye. And you need to sit there and you need to have the faith. And if you're not a religious person or a spiritual person, you need to be positive. You need to, and they go hand in hand, because if you have faith and belief in somebody or something, just the strength to believe and have the faith in that, then the prayer is, by definition, not a prayer out of harm and out of anxiety. It's a prayer out of, I believe everything you're doing for me with a capital U, you, God, that you're doing for me is the best. I don't see it. I don't know it. I can't imagine how it is. And I'm not questioning anything. But I also know that you are molding and shaping me and so many others in society into better and bigger people. And I believe and I have faith that I'll be a better person. I could be a better person. I need to seize the moment. And then the S is for strategy. You need to strategize. Again, for me, a man of faith, I believe in the mandate of hishtadlut. You need to put in your efforts. To sit here and to say, I'm grateful, I'm breathing, I'm walking, I'm talking, thank God everything is great, I'm better than the guy next door, and I'm praying to God, and I believe in God, and I have faith in God, and now I'm just going to sit here and do nothing, that is negligent. You have to have your strategy, and you need to strategize personally, professionally, and figure out, where do I want to be, and where do I see myself in the short term and in the long term? What are my goals? What are my goals for my family life, my family values? What are the goals for my fitness, my health? What are the goals for my financial situation? Again, my credit cards. Is it an opportunity to consolidate debt right now? Yes, it is. Is it an opportunity to build reserves? How do I build reserves? Do I take money in? Do I start saving money? Do I pull money out of my house or home equity, something, to put money into reserves to invest in an opportunity? Yes, for many people it is. For people who are, fiscally irresponsible, no, it's not. You call me and I would tell you, don't do anything. Lower your payment and keep yourself calm and don't start getting into wild schemes. But for many people, it is a time to strategize. And you need to strategize, and you need to think about where the opportunity is, where can I get the best 10x return on my investments, not financially, but practically, by the advice and by the guidance of people in every aspect of your life. If you want to change your faith, you need to align yourself with rabbis and with clergy, people who can lead you and guide you. Find people online, offline, in person, WhatsApp groups, whatever it may be, that are like-minded, that you believe in them. There's so many, I call them talking heads out there. Everybody has an opinion. Everybody's standing on their soapbox. Everybody's a blogger and a vlogger and a commentator. And that doesn't mean that it is fact. It is their opinion. And I keep telling this to my friends and family. Listen, just because so-and-so says it, just because someone says it, it doesn't make it a fact. It doesn't make it a reality. It makes it their opinion. We have to form our own opinions. We can rely on others to help us see things that we may not see, but at the same time, we need to align ourselves and strategize to get to the right sources that will give us information that resonates with us, that builds us up, that gives us confidence, that gives us belief, that gives us faith and comfort and guidance, fiscally, financially, faithfully, emotionally, and that will make us truly successful. And with that, I want to thank Jacob and Jake for the opportunity. It was a pleasure to watch and listen to all the other webinars that you're doing. You guys are doing an amazing job, and it's a privilege to be a part of this. And I hope that everybody continues to consciously, through their GPS, with gratitude and prayer and strategizing, work your way through it. And we look forward to seeing you on the finish line, at the light of the tunnel, when we clearly will see bigger and better days ahead of us. Thank you very much.
Thank you very much, Shmuel.